Hello everyone, this is the pre-market report video for today 23rd July 2024 for the Indian stock market in terms of Nifty and Bank Nifty. As most of us know, today from 11 am onwards, Indian Finance Minister is going to deliver the FY 2025 full year budget in the Parliament. If required, please pause and have a look. This chart shows how the Indian market has reacted to the budget on the budget day over the last 10 years, and I've also noted the important outcomes from each budget and how the market reacted to those over a 1 month period. As we see, before 2020, most of the time the market reaction on the budget day was very muted. For example, in 2015, when Arun Jaitley introduced the confused GAR rule, and again in 2018, when the Indian government introduced the long-term capital gain tax for the first time, the market did not react significantly. It seems the market was already prepared for these changes. However, in 2020, the market expected more support packages from the government, which were not delivered, leading to a crash of around 2.5% in Nifty and Sensex. Then in 2021, the Finance Ministry allocated funds to form the Bad Banks Asset Reconstruction Company, which was much needed for banks at that time to improve their asset quality. We know financial weightage in Nifty is around 35%, and market took this bad bank as very positive and rallied around 5% in one single day. So I'm guessing in order to have a similar magnitude of positive momentum today, the budget must offer something significant for the financial sector or at least to the IT sector. However, I don't think there is anything the market desperately wants in this regard. If anything is there, please let me know in the comment section. I mean, increasing the income tax slab or a budget that increases the consumer spending will benefit the FMCG sector but may not positively impact the whole banking and IT sector, I presume. However, there are ways the budget can upset the market, such as not following the fiscal deficit guidance, which is 5.1% for the current financial year and 4.5% for the next financial year. Second, any increase in the capital gain tax might be considered as negative. Third, for almost the last 1 month, SEBI's chairman has been very vocal about India's high options trading volume. So any increase in STT or any tax increase related to the derivative market could be potentially disastrous. Finally, public sector company share price have already factored in the government support for their efficiency improvements and the brakes on the privatization push. So any deficiency in fund allocation might be negative for PSU stocks. Regarding the cancellation of the privatization push, I don't know whether to consider it as positive or negative. That's it. These are all my budget takeaways. Now coming to US market, during weekend, because Joe Biden withdrew from the presidential election, the market believes there is a higher probability that Trump will win in the 2024 election, and it started factoring those. Stock-wise, Tesla increased by 5% and Google increased by over 2%. There is no special reason for this, it's just short covering since both stocks are going to release their earnings results today. In addition, Nvidia also increased by 5% as Rogers.com reported that Nvidia is secretly working on developing a US export compliance B20 version of GPU specifically for the Chinese market. All these factors made the three US major index rally. In the end, Dow Jones was up by 0.32%, S&P 500 increased by 1.08% and Nasdaq rallied by 1.57%. In case of US VIX, it dropped nearly 10% and moving from 16.5 on Friday night to below 15 last night. Regarding oil, earlier yesterday, unexpectedly, the Chinese central bank cut their interest rate by 10 basis points, which in turn crashed the oil price due to demand concerns. At the time of this video, WTI crude trading around $78 per barrel and Brent crude trading just above $82 per barrel. Coming to Indian ADR, it was mostly in line with the yesterday's Indian market close. HDFC Bank alone increased significantly 2%, whereas Wipro ADR and Reliance GDR corrected their arbitrage by falling further by 1.5%. Overall, Reliance is neutral, banks are mildly negative, whereas IT stocks were flat to positive. About Gift Nifty, it closed at 24,543 early this morning. Equating it with the spot market, it indicates a flat to positive opening. As a summary, compared to Friday, global momentum today is much more improved. However, as I said earlier, today is budget day. Though most of the time in the past 10 years, the market didn't move much on daily basis, but still during the trading time, market was very much volatile. Almost all the time, it varied between 1 to 2% on the intraday basis. Will this time be different? Only time will tell. One more thing, yesterday for the 7th day in a row, FI were net buyers. They net bought for 3,445 crore rupees, whereas for the 7th day in a row, DA were net sellers. They net sold for 1,650 crore rupees. In the whole month of July, FII net sold only for 3 trading sessions, whereas DIA net bought for only 5 trading sessions. So it looks like at present the market is driven by FII rather than DII. Anyway, moving on. Yesterday, as per stock open interest, Marico, Reliance, Wipro, ITC, Bajaj Finance, Axis Bank and Nestle saw an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Coforge, Ipeca Lab, Lupin, Deepak Nitrite, Glenmark and Tata Motors saw an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, HUL, Bajaj Finance, Torrent Pharma, ICICI Prudential Life Insurance, ICICI Securities and ICRA are some of the major Indian companies whose earnings results are scheduled to release today. In terms of macroeconomic data, obviously it's budget day, so we need to keep a tab on it throughout the day. It starts at 11 a.m. today. In addition, in the aftermarket hours, Google and Tesla results and the US June month home sales data are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 80 points gap down and traded in the range of 24,600 to 24,350 during the day. However, it finally managed to close above 24,500 mark. Thus, on the daily chart, Nifty formed a bullish candlestick pattern with upper and lower shadow, which in turn indicates the high volatility. So, if you see technically, yesterday there were positives as well as negatives. First, the positives. Nifty managed to defend 24,500 and the 10-day exponential moving average 24,475 on a closing basis due to the 150 points recovery from the day's low. This is a good indication of support-based buying. However, on the negative side, Nifty formed a lower high, lower low formation and RSI and MACD momentum indicators are showing a negative bias, indicating a bit of weakness in the near term. Hence, 24,000 is likely to be a critical support level and 24,850 is expected to be the key resistance on the higher side for a move towards 25,000. In case of Bank Nifty, it also opened 110 points gap down and was volatile and closed near 52,300. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a bullish candlestick pattern with upper and lower shadow. Here, Bank Nifty defended the support trend line as well as the 21-day exponential moving average 52,064 on a closing basis, which is acceptable, but still it was at another range bound day between 52,000 to 53,000 mark. So breaking this key level will define the momentum. Regarding the monthly options data, the maximum call option open interest was at 25,500 strike, followed by 25,000 and 24,800, with maximum new call option writing at 24,500 strike and then 25,700 and 24,800. On the put side, the maximum open interest was at 24,000 strike, followed by 23,500 and 24,500, with maximum new put option writing at 24,000 strike and then 24,400 and 23,800. Thus, from options data, 24,000 is expected to be the crucial support, while 24,800 to 25,000 is likely to be the resistance area. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.